What is going on, guys? Edward here, back with another video. Thank you so much for being here again. On today's episode, I want to discuss about breaker blocks, and I want to go deep into breaker blocks right here, not just showing you what a breaker block is, but how can you apply it. Why am I doing this video? There's still a lot of people struggling. There's a misconception of a lot of ICT traders, because since ICT concepts is not simple to understand, right? There's a lot of confusion because of how complex it is and how many wording it has, how many confluences, PD arrays, all this stuff, right? And it is quite complex to understand. So I'm going to try to make it as simple as possible so anybody can understand and how you can actually trade a breaker block, because it's not just about a breaker block, right? Because a breaker block could be created anywhere in the middle of nowhere, right? The markets will be creating all type of patterns every single minute, every single second, right? But that doesn't mean that you're going to be trading every single pattern, right? No matter what strategy you're trying to follow, ICT, head and shoulders, right? All of that stuff. If you actually look here, this is a freaking head and shoulder. This is the right shoulder, head, left shoulder. I'm sorry, what am I saying? Left shoulder, head, right shoulder. So, right, doesn't mean that you're going to be able to take every single entry, right? You have to have more confluences, right? And that's what we're going to discuss in this video. So starting right here, simple, okay, simple formation to understand. Basically, the price action right here, price creates a high, a low, right? Then we have a higher high, and then all of a sudden something happens that on this pullback, the price does not stop right here, ends up breaking that previous low, creating a new low right here. So this is the lowest point right now. This is a lower low. So again, high, low, higher high, lower low, right? It breaks, when the market breaks this low right here, it creates something also known as change in the state of delivery. It has many wordings. It has many words as well. Chalk, change of character, market structure shift. It is the same, right? So it creates a change of direction, right? The price is breaking and a structure is breaking the previous low, right? Now, in this break right here, technically in this area, this is what we're going to be analyzing once I jump into the charts, um, and show you how to mark up the breaker. There are a couple of ways that you can mark it up. I see a couple of traders on YouTube as well marking the breaker blocks different ways. ICT also marks it in a certain way. So I'm going to explain how ICT does and how you can do it. So anyways, when the candle breaks below, right, it has to be a body of the candle. I don't need a wick. I don't want to see a wick right here. No, it has to be body of the candle breaking below. When it breaks below, confirms we do have a change in the state of delivery. We have a breaker, even a bearish order block now. So what's the deal with this? Well, as soon as we see that break right here, right, we wait for the price to pull back into the breaker and we look for sales right here. But again, this is not about, oh my God, okay, it's going into the breaker, so I'm going to enter here and going to place my stop loss here or here or here, and then I will target 1 to 6 restore work. No, it's not like that, right? You have to have a better plan for that, and I'm going to explain it right here. So let's go and jump into the first example on the chart right here that we have. Okay, so let's get into context, because it's very important to know, again, that not just because you have a breaker, it means that you're going to be trading every single breaker that you see. So it's not like that. All right, so technically here we have, looks like from this perspective, it looks like we're having an uptrend. The price is just going to the upside, recently broke a high, right? So it's creating high, low, higher high. Now look at what happens at this point when prices start breaking to the downside. So if you look, I'm using this indicator, by the way, called fractals, so you can see where the highs and lows are. It can be easy for you to see them, sorry, on the charts. So when price closes below this low, right? Closure below this low, according to the chart, right? That closure below, the price creates a lower low. From there, the market has now created a lower low. What are we expecting? We're expecting now, we want to see, what we would like to see is a pullback now, the price for the price to go into the breaker, and then we go selling, right? Now, but where is the breaker? Okay, here's the thing. So ICT explains it in some videos. He was changing throughout the years, and in mentorship 22 model, it's been changing throughout the years. But there's a couple of things you can do. Ideally, it's all this series of candles right here to the downside. This is the actual breaker, right? This was a bullish order block before it got broken with this candle right here. This was a bullish order block. How was a bullish order block? Well, when the price was right here, right? This series of candle, once it got broken to the upside, this is a bullish order block, right? So expecting price to pull back, tap, and continue, probably break another high, but did not do it. As you can see, price does not respect that bullish order block and breaks it with that candle. So once that's broken, it turns into a breaker, of course. It's obvious, right? So we do have a breaker. We do understand, right? High, low, higher high, lower low. The price has just created a lower low right here. That's when it starts pulling back. So what should I take this sell or not? Should I actually go and take the risk in this sell? Well, again, context. It's important not just to trade the break, but look at the perspective. Where is the price? What do I need to see? Well, there's a couple of things that we want to see. I'm going to go back into this, right? Again, this applies to bullish, bearish. It's the same scenario, guys. It's just shifts, right? This is now a bullish scenario, and the scenario that I'm sharing with you is the bearish scenario. So ideally, what is the best thing right here to do? Well, to make it better, right? Because we just don't want to trade the breaker. Well, what are the confluences? What is the conviction? What are the convictions that we need? What are the confluences that we need in order for us to take it? Well, first of all, liquidity. Okay, that's the main and one of the most important things is liquidity. So if you happen to notice that this recent high right here has taken an old high, right? Probably from the night before or probably a few minutes ago. It doesn't matter, right? It doesn't actually really matter depending on the time frame that you're watching this. Let's suppose you are on a 15-minute time frame watching right now, and the price is taking an old high, right? From the night before or from a few minutes ago, right? Or it could be from the day, it doesn't matter. It's just some sort of high, right? It's just taking that liquidity, right? And now all of a sudden you're starting to see that force, a strong displacement to the downside. Well, there you go. You do have now an extra confluence, right? This gives you more conviction because it's not just creating a breaker block. Now it's creating a breaker block after the price swept an important high, took liquidity. So important, key right here, liquidity. Sorry for that. Right? So liquidity was taken right here. Another confluence you can add, probably a fair value gap, right? Probably a higher time frame fair value gap. It could be maybe a 4-hour fair value gap, right? The price is recently tapping. So, that's your higher time frame confluence. If the price is tapping a higher time frame fair value gap, and also you got that displacement and creates a breaker block. So the breaker block is created off of a fair value gap. That's beautiful. Another confluence, right? Beautiful. What else do we have? As soon as the price breaks right here, we do have a change in the state of delivery. We have a breaker block. And most of the times, like it should be a must right here. It should be a must. When the price displaces to the downside and breaks this low, it will create a fair value gap. Okay? Probably not 100% of the times, but most of the times. So if you pay close attention, that fair value gap on top of the breaker is known as the unicorn. Okay? So unicorn pattern from ICT. So if you don't know what the unicorn is, how to trade it and all that stuff, I do have a video actually about that. You can watch here at the top right corner. I'm going to leave it here for you so you can watch how to spot these formations. But ideally, this is the best setup that you can get. So you see, now what we have right here is not just a breaker. We have a bunch of confluences right here telling us that we can definitely take this shot. Okay, we're not just paying attention to the breaker. So in this formation right here, what do we have? Okay, let's try to like zoom out a little bit, and I'm gonna go to the 15-minute. For this particular example, I noticed this 15-minute fair value gap right here. The price was tapping uh, this fair value gap. Okay, we can also actually use the Fibonacci if we want from the high to this low, just to understand where are we. We are in OTE. This is optimal trade entry right here. Perfect. We are in premium, so it's good to be looking for sales. Right here, actually on the 15-minute looks quite good as well. You have that high, low, higher high, lower low. So I'm seeing already a lot of things, even on the 15-minute is looking good. But this formation was on the 5. And this example is better on the 5 right here. So anyways, we did sweep this recent high, right? Recent high. And we are now tapping a higher time frame, fair value gap. Now you see that the price is respecting the fair value gap. It is not like it's still not pushing to the upside, right? It fails now to continue to the upside and breaks below. We do have a change in the state of delivery. We have the creation of an order block as well, because these two candles to the upside, once it breaks, that's the creation of the first bearish fair value gap. But the breaker right here, you can mark it up. This is how I see some people doing it. You can mark it up this way. You can actually mark up the last candle before the push to the upside. So this right here, you can mark it up as a breaker. This is sort of a refinement. I'll explain why I don't do it this way, right? I'll explain in a little bit. Ideally, I cover the 3 series of candles. So what do we have on top of that 3 series of candles, that breaker block? A fair value gap inside. So voila, you do have now a unicorn formation. Again, if you don't know what a unicorn is, make sure to watch the top right corner and then come back here to continue watching this video. So another thing that probably you may not understand at the moment is that, okay, since the price is at premium right now, you see we're kind of targeting, well, I would like to target this low. I see a lot of accumulation in this area. Price was pushing. It generated a lot of liquidity below, right? Now, this is known as the market maker model. So pretty much from here, let me do it this way. This right here, this was the buy side of the curve. And now, after the price shown the change in the state of delivery and disrespecting, right, and breaking, creating this breaker block right here. So we're probably off for now the sell side of the curve, okay, which is from here to this low. Basically, this is what we're trying to catch now. So price was on a buy side. It reached an important zone, which was that 15-minute. We are in premium. We shift the structure. We create that breaker on top of a fair value gap. That's it. All we have to do right now is the entry. So where can I enter? Well, as I mentioned, you can place the entry right here, right? At the unicorn. If you have fear of missing out, you can probably place the entry right here, right? But if you don't have that fear of missing out, just your entry would be right there. The stop, you can put the stop either above the high of the breaker or this swing high. Just to go safer. It's always the safest zone. You could target this low now, right? That actual bottom right there. Or you can use the fib. This is another tool you can use the fib from the high to the low of this last manipulation move, and you can go on projection. So standard deviation projection. You can target between 2.5. This area right here is a good zone to target. So it'll be fine, if you target this area. So you see, we have a bunch of confluences now. Before I even took the trade, look at all the confluences that I'm getting, right? I'm not just paying attention to the breaker. There's a bunch of other stuff that people don't understand that you need to look at, right? So once you have all of that, you feel more confident to take the trade. So look at what happens right here. Press taps and just melts. Well, it did ended up going all the way down there. I don't care. This just right here, this would have been a beautiful trade. But you see why, right? It's not just a breaker. There's a bunch of other confluences that we need to see. It's key. It's so important. If you don't know this market maker model, again, I do have a video for you on top of the right corner. Just make sure to watch it, and then you can come back here just to continue watching this actual video. But I do explain that already on a video, so make sure to watch it. So, it is key, right? You can add actually more things to it to make it even better. So let me go ahead and show you what the next one would be in this particular case. Now that we do have, the liquidity, the fair value gap, the price displaces to the downside, breaks, changes state of delivery, break or block, a bearish fair value gap being created right here. You can enter right here. Another thing that I forgot to mention right here is divergence. This is a beautiful confluence that you can also look at, right, to trade. So again, if you don't know what a divergence is, you see, I'm adding more things, more confluences into the setup, so you can guys use it and have more confidence. So you see, once the price creates a divergence, if you don't know what a divergence is, I do have another video. I'm going to leave it on the top right corner. I have a special video for divergences. Just go ahead and watch it, and then just come back and watch this particular video. So make sure to watch it. All right. So let's jump into an example so we can see how a divergence applies, how we can apply it in all of this. How can we apply all of this in a setup? Let's see. So right quick here, we see that this is Nasdaq, right? Nasdaq, sort of, we were in a range, big range right here, accumulation, and the price is just sweeping liquidity. The main important thing here is the price is sweeping liquidity here. What time is this? 9:30. So the stock exchange is just opening, right? So price just displays to the downside. If you look at it, you see that you have a low right here, high, lower low. Now look at what price does. Price creates a high right now. So higher high, sorry. So low, high, lower low, higher high, right? So when it creates a higher high after the price swept liquidity, so what do we have? We have that break right here. If you look at it, there's two down close candles right here. This is the change in the state of delivery, right? And the breaker block is that candle right there, that yellow candle, that last yellow candle, that's the breaker block. You do have a breaker block right there. And what else do we have? We have a fair value gap on top of that breaker. Beautiful, right? So we do have a unicorn. Now, what else? Where can we target if we want to enter? We can target the high, right? What else do we have? Well, we have SMT. This is Nasdaq, right? If I move to the right here, on the right side, this is S&P 500. So what's happening right here is that Nasdaq did not sweep this recent low, right? Did not sweep it. S&P 500 did sweep that low. So this is what is known as divergence. So whenever we see a divergence, that means the price may be shifting, right, to the upside. So what happened here? Where's the entry? The entry, it's on the unicorn formation and that fair value gap. You can place a stop loss below the breaker if you want, or just to go safer right here and then targeting this highs. That's pretty much it. You see what we're doing right here? Pretty much price ends up completing the trade. You could have placed the stop loss if you want to below the breaker, just in case. Just watch it, right? It's very close. Be careful right there because it tends to be very tight. So you can have a better risk to reward if you want to. But if you're okay, just going with that and just going for a 1 to 2 risk to reward, after that, that's fine. But normally, I like to target that high. So I hope it makes sense, guys. Let me know what you think. Is this confusing for you? Is this simple to understand? I wanted to break it down to make it as simple as possible because there's still a lot of people confused with ICT concepts, like thinking that every fair value gap is going to work, every breaker block, every order block, it's not like that, right? You have to have context. You need to know when to apply it. If you don't know when to apply it, what are you going to do, right? You're most likely going to have a bunch of losses all the time. So you need to know when to apply it, what type of breaker blocks you can take, when, right? So let me know what you think. Make sure to subscribe, give it a big thumbs up. It motivates me to keep posting videos for you guys. Make sure to follow me on Telegram and check on my website, teamprofitsenglish.com. If you want to join my team, there's a lifetime mentorship right now for a very low price. Just make sure to check it. And if you have any questions, let me know. All right. So thanks again, guys, for watching. And I will see you in the next one. Take it easy.